Hi, folks. Hope everyone had a great weekend. We've got a short week this week with Thanksgiving coming up. Let's take a look at the market and what's happening today. Looks like we're kind of recovering, maybe buying the dip, but will it last? That's the big question. So I am not a financial advisor. This is only for educational and entertainment purposes. By the way, Stock Charts has a really great sale going on, just started today. If you're interested, if you're a subscriber to my website, you can just come here and click on this button right here, 50% off. That will take you to their special. I actually took advantage of this. I like waiting for these. Usually they're at the end of the year. Sometimes they do something similar around Christmas time, but this usually is the best one, 50% off, which is great, including if you're already a subscriber, it will just add on to your current subscription. So down here at the bottom, it actually has frequently asked questions. So if you're interested in stock charts and you're not a member, or if you like stock charts and you are a member, this is an opportunity to extend your membership. I think mine now is out to something like 2028 because I just sign up for these and just tack it on to the end of my membership. So I just wanted to point that out to everybody. That's a great deal. Definitely worth taking advantage of. Let's go take a look at the market and see what's happening today. Right here on the 10-minute charts. There we go. Market's moving up. Not quite to last Monday's open yet, but nice rally today, even past the 1030 point. Still moving higher. Technology's moving up. Discretionary rolling over a little bit. Communications started off down, but overall, the aggressive sectors are positive. The defensive sectors, on the other hand, are heading lower. So that is good for the markets. That is bullish. And the cyclical sectors are also basically headed lower. Healthcare, which has been the strongest one, is pretty much flat today. Industrials down, materials, energy are down, and financials. So definitely technology is holding things up. Money flow is just beginning to move higher. There's not really a lot of conviction in today's move. I'll talk about that a little bit more in a second. And this is the rotation chart. So growth versus value, that's starting to move up, but definitely off the highs from last week. Same thing with discretionary versus staples. You definitely want these rotations to continue to move higher. If you, in a bullish market, this is what it typically looks like. Technology is moving up, semiconductors doing well, and transports are doing okay today as well. There's the breadth back up to, for a percentage of over 20, it's a little bit above 50%, 50.4% right now. Not quite there on the stocks above the 50-day, but the 200-day is above 50. It's at 56% right now. So that's on the S&P. So breadth is starting to come back. That's what you like to see. This is the Russell 2000, which actually had been pretty strong and actually still is pretty strong today. So you can see right here, it is outperforming the S&P, and it's been doing that since Friday morning. And it's continuing a little bit today, a little bit flat on mid and small caps, but overall they're outperforming the S&P. So that is the stronger place to be right now. Same thing with breadth. For the mid caps, you can see this is the 50% line. So they're starting to move higher, and small caps, the same thing. Looks very similar. And then the NASDAQ 100, money flow, of course, is just like I showed before, not really that strong, but definitely a little bit positive. So NASDAQ is moving up nicely. Up volume minus down volume, starting to move a little bit higher, but not back to Friday's high. Advancers minus decliners, the same thing. So not a big conviction. The VIX, though, is definitely headed lower, which is great. So this is the moving average line for the VIX. You can see ever since about noon on Friday, the VIX has been heading lower. Right now it's at 21, so it's still above 20. Still where bears typically are in control. So as I mentioned, I think over the weekend, it's not unusual to see a market rally back, reaction rally after a big sell-off like we had last Thursday. And also typical to see it move back to a resistance line. So if we go over here to the market bias matrix page and look at the S&P, we'll see that right now it is moving back up, sitting right below the 21. And also, interestingly, right at the put and call wall. The put and call wall are both the same. For the S&P right now, they're 6,700. And the S&P right now is at 6690. So, and the 21 is at the same place. So this is clearly a really important resistance level. So if we need to have a change of character and see this market turn around, this is the first step. It's not the last step, but it's the first step to get above these resistance areas right here. The RSI is cooperating, starting to move higher, and money flow actually is not yet moving higher. That's this light pink line in the background. But you can see VIX is moving down. So this was the line in the sand level 6550, and 6500 is a really critical level. We have not gone below that yet. Although on Friday, the low was 6521. So just about got there, but then reversed and started moving higher as we're doing right now. So what do we have to do for this market to have a change of character back to a bullish view rather than a bearish view? Right, number one, like I said, we've got to get through this particular resistance. And then more importantly, we need to put in a higher high. Right now we have a lower high, two lower highs, and two lower lows. So in order for this to change character, we need a higher high. So it will need to get back up here above about 6,800 or so, another 100 points higher. So that's where we need to go for a change of character in this market. Now, if you'll notice, and this is something I always like to watch for, is patterns in the chart. And for those that understand patterns, in fact, on the website, on the charts page, I believe, let's see, is it on the charts page? One of these pages has patterns. I'll have to find it. It's not there. Chart list and scans, maybe. I'll find it. One of these pages has the typical patterns to watch for. But at any rate, what we're watching for right now is potentially a head and shoulders. So let's look at this in a different way. I'll go to a clean chart. On stock charts, we'll use the S&P, and we'll remove all of the standard views. So we just get price. There's the price. And what you'll see here is a left shoulder right there, the head right there, and potentially a right shoulder over here, but it has not yet formed. So what do we need to see? First of all, you'll notice that the neckline, if this were to be a head and shoulders pattern, the neckline is slightly declining. So that is slightly bearish. And the high up here, let's see what the high was. So the high right there is at 69.20. Let's call it 6,900 for round numbers. 6,900 is right there. So we're just about let's call it, we'll use 69.20. And the neckline right here is at 65.48. 69.20 minus 65.48 is 372 points minus 65.48. So the measured move for this is 61.76. That's all the way down here. It's actually lower than where we are right now. So I'd have to go back a little bit. There's the head and shoulders. So 61.76 is right about here. Where I would say is a good support level is right here at 6,200. So 6,200 is a very important, right there, 6,200. So if this were to form a head and shoulders, and there's nothing to say that it is, I'm just pointing this out because it's a potential head and shoulders. But if it were to, and the first thing for it to do is to go up here and then get rejected at this right shoulder and start to head back down again. If it doesn't, if it breaks through that, especially if it breaks through this trend line up here to give it a change of character. So if it breaks above this line right here, then it will not be a head and shoulders. Clearly it will not. So that's kind of what we're looking for. So that's 68.25 right there. So if it gets above that level, then no head and shoulders. If it doesn't, if it gets back up to where the shoulder is, which is at 67.65 right now, this left shoulder, 67.55, and then gets rejected and starts to move lower, then we got to watch to see if it breaks the neckline. And if it does, then it is a valid head and shoulders. And in that case, 6,200 is the target. So that's the way to look at it. By the way, over here, I noticed right here, here's Tom Bowley from Earnings Beats talking about the same thing. Are we forming a head and shoulders? I have not watched this yet, but he looks for patterns like this as well. I'm sure he's probably saying the same thing. I'll be interested. I'm going to watch it today. I'll be interested to see what he says about it. But that's what I'm seeing right now. Potential head and shoulders, which would be very bearish if it comes to pass. It is not yet a valid head and shoulders. It is only just beginning, but potentially to form one. So just something to keep an eye on. All right. What else do I have here for you? Let's look at the dashboard. First, we'll take a look at today's market carpets. Looks pretty green today. So Broadcom, number one stock up here. Micron is up there as well. Tesla is up there in the top 10. So that's all good. A lot of really dark green ones here in the large caps, which is very positive. So this is what moves the markets, and it looks like that's starting to move things back up again once more. Lilly just continues to go higher. Amazon is green, Netflix is gray, and Intuit is the only real red one over here. Palantir, dark green. Oracle, that reports on the 8th. So that's what that looks like. Not too bad. Go back to the dashboard and take a look at how things are performing. So equities, you can see they're up right now. 10-year is down right now. Gold is up today. So that's nice. And crypto, Bitcoin is up as well, but not convincingly. It's only up less than 1%. Ethereum is doing better. Ethereum's up almost 2.5%. So this is what Bitcoin looks like as of today. Had a big sell-off. It's trying to recover, make a comeback. So that's Bitcoin. Let's go take a look now at the sector, and discretionary and technology are at the top. Healthcare still up there, but these are the two aggressive areas, and staples and energy, real estate. Those are defensive areas. Those are the three negative ones. Everything else is positive. New highs. Let's see over here. Google, out of the S&P 100, Google is the best performer. Merck is next. Medtronic, Lilly, of course. 1070 for Lilly. And John Deere. And over here you can see the growth area is definitely large cap growth is definitely the area where everything is moving today. Small cap value isn't doing too bad though as well. So it's kind of opposite ends, like a barbell, opposite ends of the spectrum. Here we've got some earnings, large cap earnings. Salesforce reports on the 26th. That's Wednesday. John Deere, Oracle is on the 8th, and Broadcom is on the 11th. And then down here, Cipher Mining is up. That's at the top of the momentum list today. So Cipher is a really interesting one. They were doing Bitcoin mining and now converting all of their data centers over to AI. Same as Iron, but this is a little cheaper and a little bit earlier in. Here's Iron right here. So this is number 4. Cipher's number 1. Keep an eye on this. Up 18% today. It actually made it down to almost $15 Friday. So really good one to keep an eye on. Let's see what else. There's Broadcom is up there, up 9.5%. Let's go to the third level down. Quantum computing up 8%. Riot up 8.2. Here's Micron up 7.8 today. Tesla is up today. The bottom of the list. Let's see what we've got. Anything that looks familiar in here? Not really. Dollar Tree. Yep, not too much over there. There's a Toll Brothers. There's a home builder off slightly. Here's what the charts look like. So S&P clearly going up, not quite above the 50 and the 21. Needs to get above both of those, like I said before. That's also right where the put and call walls are. So really, really important level to get above those. The IWM, it looks a little bit stronger. It's actually just moving up above its 21 right now. And Bitcoin over here is moving higher, but not convincingly. So keep an eye on those as well. All right. One thing I want to show you is something that I've been working on, and I have not quite finished with it yet. But if we go back here and look at the Magnificent Seven, that's something that I talked about with Jesse Livermore on the webinars and newsletters page. There are lots of training videos over here. And right here are a bunch of Jesse Livermore videos. He was a premium trader back around the near the 1929 crash, where he shorted the whole market before the crash. This one right here is really interesting. The number one reversal signal when the whole market reverses. And basically the two things he looks for are the leaders. First of all, you got to find the leaders. In his day, it was railroads and radio and oil, of course. So when the leaders struggle to make new highs, that's number one. And number two is they break below the previous lows. That's when the market is getting ready to roll over. So I took that idea and expanded on it a little bit. And if we'll just take a look at one of these, let's look at Meta, because it's the worst looking one of the worst looking ones of the bunch. So clearly struggling to make new highs. In fact, it's got lower highs each time. These were the previous lows down here. It has clearly broken below that. The other things I put on this chart is how is it doing versus its peers. So the pink line is the zero line up here. So if this line is below it, that means Meta is underperforming its own peer group. The second thing is the 21-day moving average crossing the 50-day. Right there is when it happened for Meta, right back here at the end of September. So there's this one here crossed over way back here in July of last year. So the next one is the 21 crossing the 50. And then down here is a momentum indicator. So that crossed negative right there, right about the same time as the 21 and 50. Peaked above it slightly, then started back down again. So that is below. And then finally, the accumulation distribution down here went below way back here in July of last year, moved up a little bit here, and then went back below again in beginning of November. So these are all warning signs for what Jesse Livermore was talking about. So what I did for each of these leaders is I have created a spreadsheet that looks like this, and I will continue to work on this and provide a little bit more data. But essentially it's taking each of those criteria. Struggle to make new highs, going below its previous lows. Is it beating its peers? Is the 21 above the 50? Does it have positive momentum? Positive momentum is this line down here. So if this black line is going below the green one, that's negative momentum. So it needs to be above that line like it was back in through here. That's what that criteria is. And then the final one is accumulation distribution down here. Is that positive or negative? So all of those components captured in a spreadsheet like this. And if the majority of these are red, then the symbol itself gets a red. And especially in the Jesse Livermore criteria for when a market rolls over, you can look at those. Struggles to make new highs, has it hit new highs, and has it hit new lows? Hit new highs, no. For all these new highs, yes for Apple. Google is one of the best looking ones. The best one of all is Lilly. It's got green across the board, but it's red if the majority are red across here, and it's green if the majority are green. So there's only 1, 2, 3, 5 green ones of 17 total in here. So this gives you a very quick visual of the health of the market overall. And this is something that I will update every day. I'm going to put it on the website somewhere. I'm not sure where yet. If you have any suggestions, let me know. Please let me know what page you'd like to see it on. But I will continue to update this as we move along, and you'll be able to follow the leaders to see how they're doing. So just thought that was something interesting that I'll be doing. All right. I think that's all I had for today. The head and shoulders pattern is something to keep an eye on, especially if we break out of it. If we negate the head and shoulders, then and I showed you where those levels were. So that's the thing that we really need to keep an eye on. All right, that's it for now. Let me know if you have any questions, comments, anything you'd like me to look at. Don't forget the stock charts, great sale going on until December the 1st. By the way, my platform, for some reason, they don't allow me to add on to a current subscription. I would love to offer something like this so that everyone can participate, but I don't like to offer them if only brand new people can participate and not the current subscribers. So I'm working with the platform, which is Wix. Wix is the platform I use for this website. I think it's kind of short-sighted if they don't allow you to add on to a current subscription. But stay tuned. If I can figure that out, then I may offer a special as well, maybe towards the end of the year around Christmas time. But this is Stock Charts. I highly encourage you to take a look at it. If you're interested at all, sign up. If you do sign up as a brand new subscriber and use my personal email, which is danbird@comcast.net, then I get a month for free, but you certainly don't have to do that. There's no problem if you don't. I just did it. I just extended mine again out to, I think, 2028 sometime. So I'm in for the long term with Stock Charts. It's a great platform. All right. Thanks for watching, everyone. Stay safe out there. The market is heading higher, and it looks like we're rallying today, at least, with all the right things. All the aggressive sectors moving up. Still looks pretty good right now. We'll see what happens tomorrow. I'll talk to you again tomorrow. Thanks. Take care.